to A Well-Designed Business. My name is LuAnn, and I'm so glad you found this podcast. Together with my husband Vince and our partner Bill, we have grown our company WindowWorks from the ground up. So I know and I understand the challenges you face in running your interior design business. I also know that your talent alone isn't enough to ensure your success. So on this podcast, we talk about strategies and practical steps to help you grow your business. But make no mistake about it, we have our share of fun here too, mixed in with those aha moments that I love so much. This isn't fluff. Nobody has time for that. Whether you are a new interior designer or a seasoned designer, I am here to help you create and to manage the kind of interior design firm that you dream of. It's straight talk and it's action. Are you ready? Let's get started. Hey, everybody. Welcome to another episode of A Well-Designed Business. It's Power Talk Friday, and I have one of my early guests back on the show with me today. I have Diane Gardner with me. Diane Gardner is known as the tax coach, and she was on the show originally way back episode number 54. But I do remember what an impactful conversation it was for me in talking to Diane on that episode, because as you guys know, I am so lucky because I have the VIN Man, and the VIN Man handles all of this tax and finance planning and all of that stuff for us. And I remember one of my big ahas in the conversation, and I encourage you to go back and listen to it. As I said, episode 54. I remember one of my big ahas was how Diane's whole point of view is that you have a CPA, right? We need our Peter Lang, our designer CPA all day long, but you also can benefit and should take advantage of a tax coach who's working with you monthly in the weeds and really trying to be very proactive and trying to teach you to not only plan to profit, but plan your taxes out so that there are not surprises at the end of the year. Now, I know Peter does a good job at doing this as well, but there are levels and there are, it's just like seeing your GP and seeing your eye doctor. They're both MDs, but they're specialties, okay? And there's always value in helping and working. There's always value and it helps you when you work with somebody within their specialty. So I just want to tell you a little bit about Diane if you missed that first show. Diane is a certified tax coach. She's a Quilly Award recipient, and she's a best-selling author whose expert planning approach has saved her clients over $3 million in taxes. That's a pretty big statement, and I love it. Okay. She's been featured on popular podcasts such as CEO Warrior, For the Love of Money, Listen Money Matters, Investing in the U.S., Cashflow Ninja, SharkPrenuer, Wealth Formula, and Profit Box, okay? Her expertise lies in the area of tax planning, and her goal is to make sure successful entrepreneurs across the U.S. are paying the least amount of income tax that they can legally pay. Her goal is to save taxes one business at a time through the use of proactive tax planning, okay? So today, what we're going to talk about is specifically this niche of seven-figure interior design firms out there. Now, I just need you to understand that we do tons and tons of shows on how to get your business off the ground. And I recognize that I have less shows about when you are in that $1 million, $2 million, $3 million revenue area. And there are specific challenges that come in this area. So if you are one of my beloved baby designers, please don't fast forward, because I fully intend for you someday to be a seven-figure interior design firm. So Diane, thank you so much for joining me today. And I appreciate your coming back on the show to talk about moving into the seven-figure tax bracket and the things that we need to know.
LuAnn, thank you so much for having me back. It's a real honor anytime a podcast host invites me back on the show, we get to talk some more.
That's right. So there are particular things. Should we set the stage a little bit, Diane? I know that you are a certified profit first coach, just like our friend Michelle Williams is. Okay. So we're familiar on the show with profit first and how this concept works. And I have had many, many interior designers over the last couple of years since Michelle has shared this principle with us say, I've moved to profit first. I actually had a coaching session one day last week and somebody said, well, I mean, I do profit first, LuAnn, so that means I have to do this. And I was like, yes, it does. That's so awesome. So tell us a little bit about this intersection of how you are a certified profit first coach and you are also a tax coach. Tell us where and how they meet first before we get into the 7-figure stuff.
Well, LuAnn, I'm going to back up just a little bit.
Good.
And the whole reason that I decided I needed to do more than just tax planning is I was coming across so many businesses that were in super high growth mode, but their cash flow had run away on them. And they were unable to meet payroll, or they were unable to do the things that they really dreamt about and had on their goal list and that type of thing, because their cash flow just wasn't there. But on their tax returns, they were paying just tons of amount in tax. And so I thought there's got to be a better way to fix both problems at the same time. And so that is when we got involved with the Profit First professionals and decided that tax planning and profit planning really shake hands well together. Profit planning, helping them get their cash flow back under control. Tax planning, finding ways that they're overpaying their tax or leaving a huge tip for the IRS that they don't need to leave. Put that money back in that business, allow them to help it fund their various accounts that they're using in their profit planning. And now we have a business that's even more successful than they were if we were just offering one service or the other.
Okay. I love it. So this is great. It's being proactive and using everything at our disposal to maximize, what the reason why we do this, right? So that we can, make a change in our life and our family's life and really contribute and make a nice income for ourselves.
You bet. There's nothing more rewarding than to look back at maybe a client we've been working with for a year or two and see where they were yesterday and where they are today, and look at the growth they've experienced, whether it's, revenue or profit or just personal growth or family, whatever that is, being able to look at that and go, wow, I had a small part in that.
I love it. I love it. Okay. So where do we start first? I mean, there are certain things that we all hear. We hear, heavy taxes are inevitable for 7-figure entrepreneurs. But is that the question that we should start at, Diane? Or do we start on that profit planning part? Like, get us going?
Most of the time, people reach out to me because they're in pain over the taxes. Okay. Either just filed their return at the time we're speaking. There's still some people that are possibly on extension. They've just filed that tax return and it was painful. They may not have had a conversation with their tax preparer or their accountant in maybe a year's time. And they took their stuff into the accountant, and maybe last year, let's just say their business was $400,000 or $500,000, and this year it's at $800,000 or $900,000 because they've had some humongous growth. And they were making their estimated payments on that smaller amount, thinking that they were totally fine, not even dawning on them that they're going to owe another big chunk of tax. Take the information into their accountant, get that tax return done, and then they're in shock. What just happened? Okay. Yeah, I know my sales were up, but what just happened? And that's usually what drives the beginning conversation is, ouch, that hurt. And because they don't have that ongoing relationship like you talked about with your husband and your accountant, they don't have that kind of a relationship, so they didn't know this was coming. Right. And so that seems to be what opens the door most of the time is I'm in pain over this amount of tax that I just paid, or I'm afraid of what I'm going to pay next year because my business just went from 700,000 and now we topped the 1 million point. What's that going to do to me tax-wise? And so those tend to open the door. In the process of looking at their tax returns and their financials and stuff from a tax planning standpoint, I also put my coach hat on and start looking at them from a cash flow. What is this huge growth that they just experienced? What is that doing to their cash flow? Are they having trouble meeting all their different monthly obligations in a timely manner? Because sometimes a phase of super big growth is really painful to a business. They've had to bring on more staff. The staff may not be fully operational as far as being able to make some profit off of them. Maybe mistakes are getting made because the system is breaking down. It worked when you were a smaller business and it's not working as well now that you're bigger. So there's all these different things that become little red alerts as we're looking through somebody's financials and tax returns over here on the tax planning side. And then I said, this person could really benefit from some profit planning. And then we start in with the Profit First, the whole platform that they have available for us.
Okay. So I want to go back to a couple of things. The first thing is to just share that I hear that one of the major red flags is that if you do not A, have a tax coach, and B, you have a CPA, but the CPA is really just fine seeing you once a year. Like, this is the first red flag in my mind. And of course, it does bring into my mind my conversation with Peter Lang, the designer CPA, because I remember he told us at LuAnn Live back in March at our live event on the stage. He said to us, look, if you're going to be a client of mine, at minimum, you're required to meet me 4 times a year. I prefer it monthly, but if you won't meet me 4 times a year, I actually won't take you as a client. And I'm seeing now exactly what you're saying is, whether it's a tax coach or it's a CPA, if you did, as to your example, $500,000 in sales in 2018, and nobody knows that 2019 you're at 500,000 at the halfway point, who's like, saying, hello, start putting more money to your estimated taxes, start moving more money to accounts to be prepared for this, right?
Right. Yes.
Yeah.
And sometimes you're so busy charging down that road because you're now 500,000 at halfway that thought hasn't even entered your mind. You're just worried about my next appointment, my next client, my shipment didn't show up on time.
Absolutely.
What am I going to do?
Exactly right. And then you mentioned my husband and our CPA. So the relationship there, to refresh everyone's memory on that, is Diane is recalling our first conversation, where I had an aha moment in our first conversation because she was describing that relationship that a tax coach brings and how the tax coach complements the CPA. And I realized that in our situation, our CPA functions as both, but that's partly because my husband and our CPA are actually friends. They started as friends. They went to high school together. These guys have known each other. I don't want to tell you, but it's like over 50 years now, And so the thing is, Vin has always taken advantage of the expertise of our CPA. And whether it's once a week, once a month, whenever he's thinking to himself, what should I do about that? What do I think about that? How do I get around that? He just picks up the phone and says, hey, Frank, can I come in tomorrow at 10 o'clock and sit down for an hour? And that's that relationship. But short of having that sort of built-in safeguard, your point is, and I'm harping on it because it's so well made. I love that so many interior designers, Diane, in the last 3 years have gotten bookkeepers, have gotten tax coaches, have gotten CPAs, have done the things that they now know because we're hammering it home that needs to be done. But it's not enough to just have the person there and, to your point, show up once a year. You have to be an active partner in what's happening in your business, right?
You bet. Yes. And to Peter's point, I pretty well have the same type of I'm going to call it a screening process in here, that if somebody's not willing to meet with me on this regular basis, whether it's monthly or quarterly, then I really can't help them.
Right.
Because I can't do all the work myself. They have to be invested.
Right. Well, because that's just it. It's like, if you're not going to come to the table as the owner of this business and show your interest in it, what am I going to do? Right. I'm just going to beat my head against the wall. And the fact of the matter is, there's a lot of CPAs that will allow that, but not you and not him. And that's the point. Right. So, okay. And coaches that will. Okay. So now, what happens now when we start to get into this situation? Maybe we are completely aware and we are meeting every month or every quarter, and we know, whoa, we're moving from 600,000-700,000 in gross revenues, and we're going to hit 1.2, or maybe we're going from 2.5 and we're going to hit 3.2. Like, what are some of the things that we need to think about and look out for? Or are we just like, get ready, you're just going to pay heavy taxes, no way around it?
Well, LuAnn, as your business grows, you're able to take advantage of different types of tax strategies that maybe you couldn't afford to take advantage of when your business was small. And those are going to be strategies that allow you to retain and hire higher caliber staff. We might, and I'm kind of thinking along the lines of the retirement planning world, where maybe we can offer a 401k plan that we couldn't offer back when our business was maybe 100,000 or something, because we just couldn't afford it. But now we can afford to offer a plan like that, which then helps that person that you're trying to hire, maybe a higher level or higher caliber person. And that is one of the things that can help draw them in and get them to stay longer with you, because then they vest into your program. And it gives you, the owners, some nice tax write-offs, because you're picking them up on the backside as well as through your own payroll deduction. And we structure this plan so that it benefits the owner generally, more so than it benefits the employees, but it gives you another tool to use to get that higher caliber person.
Right.
Therefore, you're not going through as many people, and you're getting better ones that will stay with you longer.
Okay. And we do have a 401k at WindowWorks, but I don't remember at what gross revenue level of sales that we started to do that. I can tell you that we've been doing it. My goodness, Christy's 30 years old, so we've been doing it, I mean, almost 30 years. So is there a level that someone, a designer listening, should say, okay, when I approach this level of gross sales, I could be thinking about not only offering this as a value, to your point, to attracting better quality people to work for me, but because this is a great mechanism for me to reduce my tax load? Is there some threshold number that we need to think about?
I generally see businesses wanting to invest in that type of a larger, full qualified retirement plan when they start having maybe a couple 100,000 net profit. That's taxable profit.
Okay. So it's more based on the net profit as opposed to the gross revenue number.
Correct. Right. But prior to that, there are other programs out there. There's like the simple plan, or if they don't have a bunch of employees, maybe even a SEP. So there's stair steps up, we say stair steps up the ladder before you would move into the 401k. So somebody who's got lower profit can still get into one of the other plans and go ahead and give their employees some benefits and take advantage of it for themselves. The 401k just gives us a little more flexibility, but it does come with some costs. There's a tax return that gets filed for the plan, and we have to have a third-party administrator. So it's going to cost a couple $1,000s a year just to administer that plan. So we have to make sure that it all pencils out and that they can afford those costs, and that they'll still get a great return on their investment by investing in that type of a plan.
Okay. So of course I'm getting all this deja vu stuff happening, because both the word SEP and simple plan are definitely in our WindowWorks, past. And so maybe so it's like a step thing. So when you're a smaller business, maybe we were experiencing $50,000 or $60,000 net profit, and we might have set up a SEP or a simple plan. And as we've grown, we've graduated to the 401k, is what you're saying is a typical trajectory?
You bet. Yes. And then when income gets much higher than that, then we start looking at maybe into the defined benefit arena, but that is for a much higher net income. That's
where we're dreaming to be.
That's right. All of us want to get there.
That's it. Okay. So I got to write it on my vision board. WindowWorks equals defined benefit arena. Okay. These are the kinds of conversations Vin will say to me, LuAnn, we're already there. And I'll be like, oh, we are?
Cool.
I have no idea if we are or not, but that's the point. I will ask him at dinner tonight.
He's going to go, what prompted that one?
That's right. Because he knows it didn't come from my brain. So, okay. But so this is great. So this is information from my baby designer all the way up to my seasoned designer. So, and you might be a seasoned designer that's over that 7-figure revenue mark and maybe experiencing that 200K net margin, net revenues, net profits, right? But maybe you're not doing this. Maybe you didn't realize that, whoa, this is a great way to incentivize your people, but also a great way to minimize your tax load. Is that what we're saying, right?
Yes, yes.
Okay. And just as curiosity, if I am already, say I'm doing 2.5 million and I'm doing, I'm making 300,000 net profit a year, do I just go right to 401k, or I could possibly still start with a SEP or a simple, or they actually have their role, and if I've passed them, I've passed them?
Not necessarily. What I would recommend is having an analysis done, which is what I do when I prepare a tax plan for one of my clients, is I'll run the numbers. Here's what your savings would be if you were to invest in a SEP. But, oh, by the way, you have 3 employees. So if this is what it's going to cost you because of your employees. Here's what it would be if you invested into a simple. And then here's what it would be if you invested into a 401k. And by the way, there's several different kinds of 401ks. And so then we just start running the numbers, and then they can make a educated decision, not an emotional decision.
I love it. I love that you will provide the service of providing the analysis for it. And maybe that seems obvious to you, Diane, as somebody who does this every day of the week, but to the rest of us that are not the math brain and are not the finance brain, and this is all new information for us, to know that my biggest thing when I talk with people like yourself and Michelle Williams and Peter Lang, my biggest thing, and the reason I gravitate to some of you more than others, is because I appreciate so much when you don't make us feel stupid for not understanding what you do, like riding a bike. Right? I mean, it's just, I wouldn't know. I asked the question. I didn't know what the answer was going to be, but I love that the answer is, let's figure it out for you. Ask me the question. I'll run you the numbers, and then you get to make an informed decision. That is just music to my ears, as opposed to, well, you should kind of know and, read it in Google. I mean, I don't know. You know what I'm saying?
Well, LuAnn, this morning we met with our financial advisor who administers our retirement plan here in my office. And it felt funny to be in the client seat as he was going on and on about all these numbers and trends and everything. I thought, this is what my clients feel like.
That's
okay.
Right. Eyes glazing over, thinking about fabrics and wallpaper.
Instead of numbers.
That's it. It's like, when will this agony stop? Okay. But we have to do it. I mean, we really do. So, okay. And all right. So now, one of the things that happens, I know exactly, we have had growth periods at Window Works at so many phases of our 37 plus years, and we are in it right now again. And so for us, and what I know is to be true, every time you make a jump like this, it's exactly as you said, big growth phases are costly. You add staff. The staff doesn't necessarily know what they're doing or how to do it as efficiently as they will eventually, right? And so you end up throwing a lot of money at this like runaway train that is barreling down the track, unless you have, you're accustomed to this growth and you've seen it before. And even then, I have to tell you, Vin and I are having conversations every single week. Like, whoa, what are we doing? Are we la, 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 la? But that first couple of times when you bust out and grow and it takes you by surprise, it's a little unnerving. I mean, it's exciting and unnerving at the same time. Have you found that to be true with your clients, Diane?
Yes. And for myself, and I'm going to say it's downright scary.
Yeah, okay, there you go. I'll go there. I'm
with
you.
Because sometimes it happens so fast.
Right.
And it's like, what just happened?
Mm-hmm.
And I'm finding a lot of my clients have been in that in the last couple of years. We've had a healthy economy, and their businesses have just skyrocketed in the last couple of years. And they look at me like, how did that happen? And so we have to kind of step back and look at some of the things and the steps that they've taken. And just because they were able to manage a business at the size they were before doesn't mean they can easily manage a business that's considerably bigger. It takes a different skill level. It takes a different mindset. It takes a different set of leadership skills.
And the thing about it is that to you mentioned it at one point when you were discussing it, is it stresses your systems. You know, the systems that are solid, they rock right through it. The systems that were sort of shaky, you know, they are the things that really they're the things that they're the things that really do create that scary anxiety type feeling that you have. Because even if you're going from $30,000 a year in gross sales to $60,000 a year, right? It's only a $30,000 growth, but that is as impactful when you do double growth to somebody like me that's going to grow by 18 or 20%. You know, it's because for me, the numbers are huge. So the amount of clients that are coming through the door to create that much growth is insanity for us. But for the solo, a double, you know, a year of 50% growth is crazy, right? It's like, whoa, who does answer the phone? Because I'm out all day designing, right?
Yeah. And they'll find that they really did not have the systems in place that they need to take it to that next level up. So that's where, again, if you're working with a good professional team, whether you've got your accountant, your tax coach, your profit coach, hopefully an attorney, different people in your financial team, they can help you with some of these systems, because some of them in that team have been there and done that, even though they're not in your industry. Right. They're in a different industry, but we all experience a lot of the same growth, the uncomfortableness of growth. Right.
And, you know, just an aside, what's interesting for me is having been through this cycle of dramatic growth many times in these 3+ decades, I now sometimes if I have been a longtime client of anybody, any particular vendor or trade, big or small, if they have previously delivered me exceptional service, and now we hit a run where the ball keeps getting dropped and everybody is looking around going, what's with so-and-so? What's with this company? And my brain automatically now goes to, I'll bet they're in a growth mode. Yes. Like I just automatically go, I'll bet they're in a growth, because I know what it feels like. It's almost like an earthquake under your feet. And while you're really, really growing in that 2, 3, 4, 5, 6 month period, the ground is moving. And you're trying to grab onto something to stabilize it, but you are so busy handling it that it's hard to sit still and get clarity and reestablish the new things that you need to do. And until you can do that, you just drag out the pain, honestly.
Right. And you become the fireman. You're going around all day squirting your hose, putting out fires. Brutal. Instead of the designer who designs the business that they want to live in, work, and own.
Exactly. Now, tell me about when we think about altering our tax bracket and we want to avoid overpaying. What are some of the things that happen that we need to, what is that about? And what do you think about that? And tell us about that, because growth is going to mean that we are going to potentially move to a different tax bracket, right?
Correct. Right. One of the areas that we like to look at if a business that's in high growth mode is, are they in the process, or are they getting close to potentially outgrowing their entity type?
Oh, okay.
That can sneak up on somebody and they don't even realize it. And all of a sudden they've got an entity that's holding them back, or that's costing them money in tax, or something along those lines. But if we could change them into a different entity, now it kind of opens up the door and they're able to take off and go again. But people don't realize that their structure of their entity can actually hold them back in growth.
That's interesting. Okay, so we're talking about whether you are a sole proprietor, whether you're an LLC, whether you're an S Corp. I don't know if there's another entity that I'm forgetting.
Right, even a general partnership or a C corporation. There's 5 different entity types.
5. Okay. And so, for instance, if you opened your business as a sole proprietor and you were doing very happily doing $50,000, $60,000, $70,000 gross revenue sales a year, and now 3, 4, 5 years later, you are in the 400, you're moving to $500,000 revenue area, if you haven't gone back to relook at, that's what you're talking about.
You bet. And there's another area where analysis needs to come in and happen, and put it down on paper. And this is what we do for our clients, is we actually will run out the numbers, and I can do I call them little pretend tax returns. Mm-hmm. What would happen with you where you are in whatever entity type that you're in, versus I'll come up with maybe a couple suggestions. And what would those numbers do if we were to run this out for a couple years? Because sometimes you kind of need to look at more than just 1 year's worth of data.
Sure.
And what would that happen? What would it do for you if we were to make this change on paper, for sake of discussion? What would it do? Because we have to look at it not just from the financial or the tax side, but I have to look at it from the liability side. Though I'm not an attorney, but I still have to look at it from that side. For future growth, what kind of benefits do you want to offer your employees? There's just a whole checklist of things that we will look at when we run this entity analysis, and then sit down and present the data again back to the client and allow them to make a more informed, educational, not emotional decision on what entity type they should be. And sometimes they're perfectly fine. We say, based on what we've done and what these numbers say, it looks like you're right where you need to be, and this is going to keep you going for the next however many years.
Okay. Now, let me ask you a question. It sounds like to me that there's no way to just select, let me ask you, okay. It sounds like to me there's no way to select the entity that's best for you at this moment that will be best for you at possibly a moment 5 to 10 years later, assuming you go from open my doors, zero income to say 3 million in gross revenue in 5 years. Okay. So because what I'm thinking is, for instance, correct me, but once you are a 7-figure business, is it most often that it's the best advantage to be an S Corp, but to be an S Corp when you are a 0-figure business is expensive to be? Like, tell us why we wouldn't just go to, I'm going to make $10 million a year in gross sales. Just set me up for that one. Because, I'm that kind of girl. I'm going to put it on my vision board. Let's just go there.
Because I put it on my board, it's just going to happen.
Exactly. That's pretty much how it works in my world, Diane. But is there a flaw in that? I'm assuming there's a flaw in that thinking, or otherwise you would have said, everybody should just do this.
Right. Yeah.
Okay.
There is some introspection and thought that needs to go into it. Over and above just that part of it, different states have different requirements.
Okay.
And so we throw that caveat into the whole thing too. So generally, if somebody is thinking about becoming a corporate structure of some sort, there's some additional costs that have to happen. There's going to be some filing fees with the state potentially. There's going to be an extra tax return that's going to be required. There might be some more additional in-depth type bookkeeping or accounting that has to happen. There might be some additional payroll that has to happen. So we have some costs that are going to come with becoming some sort of a corporate type structure. And so somebody just starting out in business is going to look at that and go, we can't, it's kind of cost prohibitive.
Like, why would I do all that? Right.
Right. Though I do see people that open their doors for business and they start out in a corporate structure and they spend tons of money way before they're ready to do something like that.
Okay.
So that's why I would never ever say somebody, just because you're at X amount in revenue, you should be an S Corp or you should be a C Corp or something. Okay. I want to do that analysis behind it, and then taking into account the state that they live in. Some states have some pretty cool stuff with LLCs. So it just depends on where they're located across the U.S. And the best way to get that answer to that question is to do that entity analysis.
Okay. And so I guess then if I am now a interior designer that is in the 7-figure gross income, gross sales level, and maybe whoa, never thought about it. I'm an LLC. Should I be an S Corp or a C Corp, or I'm still a sole proprietor? Is that even possible? I don't even know if that's possible to be that level business and have still been a sole proprietor, but maybe no one in their world, no CPA, no bookkeeper, no one has said to them, you might benefit from looking into this. Would you say that as a blanket statement, if you are in the 7-figure bracket, that you should at least look over what you are and what you might better be? Is that like just a blanket? How could that be wrong?
Yes, that is a very well-spoken blanket statement.
Okay,
yes.
Okay. Because I mean, I would say that should be the first phone call. Like, let's just at least find that out. And the CPA is, if they don't have a tax coach like yourself, Diane, of course they can call you. They can. Do you work as a one-off? Could somebody call you? One of my listeners call you and say, "Hey, I want to do this analysis thing that you keep telling us about." Is that a service, or do they have to be a signed-up, ongoing client of yours?
Well, generally, LuAnn, what we do is I'm open to doing what we call just a general tax analysis, where I have them send me their last couple years tax returns and maybe a current financial statement. And we'll take a look at that. We'll have either a phone or a Zoom. I prefer a Zoom meeting where we can just talk a little bit about, here's what I see on your tax returns. Here's what I see on your financials. It looks like you're possibly overpaying your taxes by about X amount of dollars. And then by the time that conversation's over, we pretty well know if they want to move forward into a real tax plan. And then that entity analysis becomes part of a tax plan that we would start working on for them.
Okay. All right. So it's always good to understand how we access all the superpower information. Okay. All right. And so the thing is, the idea is, and I remember this from our first conversation that we had in episode 54, we did spend some time talking about the different entities and how they can make a difference. And you don't just make assumptions, that you should have some good advice. Okay. I love it. And then, I guess the other thing is, are there other strategies that these 7-figure interior design firms out there should be thinking about, and things that they can implement to keep more of their money and give less of it away?
As they start moving into the 7-figure arena, there are some wonderful things like a captive insurance company would be something we would take a look at. Would this particular business benefit from something like that? It's another layer in the higher end tax strategies, and it allows them to basically own their own insurance company and pay for their liability insurance. There might be some errors and omissions type insurance. There might be some maybe some property insurance. There's some insurance for unforeseen things out in the economy. There's all kinds of different things that you can bundle together, and you basically pay your policy amounts to your own insurance company, and your insurance company then is able to take some of that money and invest it into various kinds of investments. Because you notice when you go to any larger city, who has the biggest buildings in the downtown area? It's going to be an insurance company or a bank.
That's it.
So you know who's making the money.
Right.
And so what if you were to become your own insurance company and pays this money in, and then down the road when you're ready to close down your business, you've got this money sitting in your insurance company that then can be used for part of your retirement strategy. So it's a pretty cool concept for those who are moving up into the 7-figure type businesses.
Okay, you can't see me right now, but my jaw is sitting in my lap. I've had a gabillion conversations with not just people on the podcast, but, business owners in high-level masterminds, my husband sitting around talking with him, I've never heard of this. A captive insurance company?
Yes, it's an amazing strategy when it works. It doesn't work for everybody, but when it works, it's an amazing strategy.
Wow. And do you have to set up a whole separate LLC? Now you're like LuAnn, I got our insurance company, and Window Works, you owe $1 billion this year. Because that would be awesome.
We partner with a company who does nothing but these types of companies.
Wow.
And they would set it up as a separate entity, and they would administer it and manage it, because you have to meet all the requirements of the state that you're in. And so there's some hoops we have to jump through.
Is it legal in every U.S. state?
I believe it is, from what I've been told.
It sounds like what are those things called? It sounds like a Ponzi scheme.
It's not. Nope, it's not.
I mean,
Yeah,
it sounds like, let me just pay myself over here and it'll all be there when I get back. I mean, honestly, that's insane. Like, oh my goodness.
Yeah, there's rules you have to follow because you are acting like a real insurance company. And so you have to be able to pay your claims if you have a claim of some sort. But it's a pretty cool concept when we can make it work. And so we love to have the conversation and hook you up with our third-party company that we work with and get involved in that conversation with you and see if it qualifies for your business. And if so, you will save some money on taxes. And we can't say that we're doing it because it's a tax strategy. We have to show that there's economic reason for doing it.
Okay.
But we've got a couple clients taking advantage of it. And it's like, woohoo, look what this just did for them in their business.
So when you say you have to be able to pay your claims if you put a claim on yourself, like here I am, I'm a 7-figure earner business. I'm listening to this show. I want to do this. I'm thinking about this. So I'm going to take X amount of dollars a month, obviously, to pay for my insurance policy. That's what it sounds like. I'm going to take money from my one company to pay to my insurance company. But say 4 months in, like if I had an outside insurance company and I just opened my business, well, of course, okay, I just started a new insurance policy. Let's do that. I'm a mature business, exactly who the point of this podcast episode is directed to. I'm a mature business. I open up a new policy with a new company. I pay $3,000 a month for my business insurance, my liability, all these things that you mentioned that we bundle in. And the fourth month, I don't know, a $40,000 chandelier falls down from the floor and I need to put a claim on that. If I'm with a stranger insurance company, they've got the money from 9 billion other people. But if it's my own insurance company, how am I making sure I can afford to pay that? Like, am I putting up my house? What am I doing?
No, but the way he explained it to me was that there's a certain pool of assets that your insurance company pays into this pool of assets. And so there's enough money there to cover everybody's claims. So it's not necessarily coming out of your own pocket from day one, and your pocket being the insurance company. So they've got this all set up and they've got them working well all over the US.
That sounds like a good draw against commission. That's what that sounds like. A draw, draw against case, right? So if I have a sales rep and I'm going to pay them straight commission, but they don't have a sale for 6 weeks, I'm paying them every single week. And then when they ultimately have sales, it's like, okay, now we're going to pay me back over here because I've been paying you out. Okay, that's really amazing. And I don't know that I know enough more. My brain is reeling about all the questions, but I guess it's probably getting a little too in the weeds.
Right. And this is a point where we would say, if somebody's interested in pursuing some information on this,
exactly,
reach out to me and we'll schedule a call with the guy that I work with Randy. We'll schedule up a call with him and then just walk through the scenario. Will it even work for your business? And if it doesn't, there's no harm, no foul. You learn something new. And if it does, we can make the decision if they want to move forward.
Okay. So for clarification, that's like a free 20-minute call, free half-hour call. Is that what that is?
You bet. Yep.
Okay. Okay.
And then I would, set them up.
Okay. And now let's talk about threshold there. So is there a certain level of threshold either on net profit margins or gross revenues that you would say to any particular designer listening, don't set the call up, sweetie, until this?
Probably in the gross revenue of that 3 to 4 million range.
Okay.
Up in there.
All righty.
Be able to make this pencil out so that it works well for everybody involved.
Okay. Well, we've got them out there. I can tell you that. I'm going to be telling the VIN man about it. I want to be in the insurance business too. Winter treatment, podcasting, it's not enough.
These are the types of strategies that your average accountant isn't talking about.
Right.
Because they're not in the world of tax planning. So this is part of building out my team, my financial team, so that we can cover different scenarios for different kinds of businesses.
Right. Okay. I love it. Okay.
Yeah.
Now, one other question. This is a funny question. I recently was aware of a conversation with it was at a live retreat that I was at, and two business owners were talking, and I was sitting in, and they were sharing. The one business owner was sharing that they were using a particular trade, and this particular trade was a solopreneur, probably fairly new in business, 1 to 3 years. And the one business owner there had gotten to the point where his business was consistently hiring this other person, and it was great. The second person's business was growing, but by virtue of that, the original tradesperson business was growing too, right? Because this other person was consistently feeding business. And there came a point where the trade that was supplying the services wanted the other business to start to pay them under the table, because they were making so much money working for this person that it was pushing their small business into another tax bracket. And I remember, you have to understand, conversations like these, I think to myself, well, that sounds ridiculous. Isn't that why you're in business, to grow? Just figure out the next level, blah, blah, blah. But then I think to myself, am I crazy? Do I not understand this? So I go to Vinny and I'm like, blah, blah, blah. And he's like, that's the most ridiculous thing I ever heard. That's the whole point of business, isn't growing and blah, blah, blah. Why would you want to put the hand shackles on it? And
Right.
So do you see it the same way, Diane, that one business owner was being short-sighted, and instead of embracing the growth and looking at what was happening, was saying, I want to just stay at the size that I'm at now? Maybe there was family reasons. We're not talking about any of those things. We're talking about, you're a business owner and you have blinders on, that when you grow, you are going to go in a different tax bracket, but that's not the bad guy. That's not the mojo. You know what I mean? Right?
Right. Yes. He was being extremely short-sighted.
Right.
And even though he was the smaller business owner, 1 to 3 years, there are potentially some tax saving strategies that he could take advantage of that would maybe keep him from going into a higher tax bracket while his sales increase. Okay. So he was being short-sighted, and he probably didn't have a good, strong financial team behind him to have those kinds of conversations.
Right. You see, when somebody shares a story that has to do with finances and it doesn't make any sense to me, but I think I get this, and that makes no sense, then of course I go, do you really get it? But I just thought, that's just crazy. That's just, why do you, the whole point of starting a business is to grow it and to be successful and to create more income for yourself. But the reality is, there are stages that you're going to meet at and you're going to exceed. And your whole point and what you do for your clients is exactly that. Teach us how to look ahead to them, know what's coming, right? Plan for it is your whole that's a message I keep hearing today. Plan for it and go into it eyes wide open, and more or less mitigate what you're going to pay, but don't be afraid to grow. Don't be afraid to be a bigger business, right?
You bet. Plus, he was putting his whole relationship in jeopardy with the larger business, because the larger business, they've got an internal staff that's going to want a W-9 on everybody that they're paying money out to, and they want to make sure that their I's are dotted and their T's are crossed for auditing purposes. If they get audited, they're not going to want to pay him cash under the table and get themselves in trouble. Right. So he potentially put that relationship at risk with that.
There's no question, because the person that was relaying the story was like, I said, no way. Like, I can't do that. Number one, to your point, I'm not going to put my business at risk. But number two, you as a business owner, you need that expense of that service.
Yes.
If you can't collect X amount of gross income on an individual project and not have X amount of product costs attached to it or service costs is attached to it. It doesn't,
Right.
you can't run your business adequately because your numbers aren't showing the right thing. And so,
Plus,
right, if that person became a big category, so whatever that trade service was, like I have certain vendors for us that they're, even as a small, I'm thinking of one firm that is a 2-person firm that we buy certain product from. We do $120,000 a year with this little firm. If that was all under the table money, that's throwing off my complete numbers story, isn't it?
it does. Plus, what people don't realize is the IRS has what they call audit technique guides. And in those guides, they know what your percentages should be.
Mm-hmm.
Because they look at, hundreds of thousands of businesses. They've got the best data in the world. They know what your numbers should be. And when your numbers fall outside this box, there better be a really good reason for it, or you're going to potentially have an audit on your hands.
Absolutely.
And so for your business to not have that expense could cause you to fall outside that box.
Right. And especially in that case, if it doesn't have the expense because you are paying under the table, now you are in jeopardy.
Yes.
It's funny that you mentioned that because we had a situation in Window Works. I want to say, I don't remember how many years ago. Oh my goodness. I don't know if it's maybe 10 years ago, but we were audited 4 years in a row.
Oh, wow.
Yes, 4 years in a row we were audited. And it turned out that we ultimately found out that it was exactly what you said. It was that box that we were outside of. And there was this little, calculation that the IRS has that says X amount of years in business, X amount of gross revenue, X amount should be the marketing outlay. And it should fall into, the parameters of what they thought our gross spend every year on marketing should be. And we were beyond it. And so they suspected that we were just attributing things to marketing that in fact were not marketing. And so they audited us. And, the fact is though, the VIN man is buttoned up. I mean, he had every single thing and every single year they spent hours in our books, hours at our CPA's office. And actually the 4th year when they went to audit us again, and by now we knew that it was like we were like pounding our head against the wall. We're like, it's us again. The people who spend a lot of money on marketing. We know it's more than the average business, but it's our business and we like it this way, right? And when they did it the 4th year though, they came to us the 4th year. It was funny because Vin looked at our CPA and he said, the thing that gets me about this is they can see the pattern and see that we overspend on marketing, but they're not seeing the pattern that they've never asked for a single document or justification on a single line item that I haven't had. And he said, not for nothing. And I appreciate you and your staff that you have your systems down so that you can do it too. And that I've got clean records at Window Works and, all of the files for all the years. He said, but it costs me like $3 to $5 grand every year to just pay you to handle this. Like, this is crazy. And so that year, our accountants, he protested and he said, this is ridiculous. This isn't just, hey, we're just going to audit you and it's inconvenient. It's costing this business thousands of dollars for you to continue to find nothing. And so we haven't been audited since. Well, but of course, with the internet, we've reduced our marketing, by the way. It's like it used to be that we used to spend, $150,000 a year on print marketing. And so, now it's different, but that's another issue that you need to be in a conversation with your tax coach and your CPA, and you do have to have all of your records, well maintained, and they can't be in a shoebox, right, Diane? They've got to be, here is all of the invoices for this vendor. Here's all the invoices for this. Here's all the Amex. He's a lunatic, my husband, but it's good.
It's very good because people don't realize lack of receipts equals lack of deduction, and they will disallow them right and left, especially on the credit card. You mentioned your Amex.
Oh yeah.
So many people think that if they just have the credit card statement, that's good enough, and it's not.
No. You
have to have every receipt because the receipt shows what you actually purchased. The statement just shows that you paid it.
Right.
And the IRS and the state governments will disallow every expense that you don't have a receipt for.
Oh, I'm telling you, the agents that were assigned to us each year were flabbergasted at the organization of his receipts. But it's every Monday morning in our Monday morning meeting. Okay, everybody hand in their receipts. And here we are, we're all digging through, and they're like, like butterflies falling out of our wallets and stuff. Okay, here's mine. So, but it takes a lot of work to be financially organized. It's no joke. It is no joke. And, interior designers, I think more than many of the businesses out there, have so many details that they are running on the product facing side, the client facing side, that when you add this layer of responsibility to a small interior design firm and even a larger firm, it is no joke. It's not easy, but it's important, right, Diane, to be conscious and to set up the system so that as time consuming as it is to be financially organized, it always saves time and money at the end of the day and the month and the year when you put in the effort in this regard. Do you agree?
You bet. And most definitely, if that unforeseen, you're going to get audited comes up, then you definitely pay for it many times over by having a great set of records.
Yes. I mean, I know it saved us thousands in fines because of the weird things that he pulled out of crazy places. So, and the funny thing is for him, many times, almost every occasion, the auditor would be at the accountant's office and they would call over and say, they're looking for XYZ receipt, 7 months ago on this date, blah, blah, blah. And he would go right to a spot where he knew it would be. He would pull it out, fax it over to him. And, our CPA just said the auditor was like, this guy's nuts.
Those are my favorite clients, though, that really have their act together in the record keeping organization world.
Yes. Yeah. It takes a lot of work. I mean, I make fun of him all the time because he's a lunatic, but my God, I appreciate and value it because one day it's going to be my job and that's going to be scary. I'm just, I keep saying to him, you don't want to retire. What would you want to retire for and do what? Come on, man, back to work. Let's go. Oh my goodness. Well, Diane, I just think this is awesome. I love that you are so approachable and that you are the type of person that understands that not everybody's brain works this way and that it's not easy for everybody to really grasp the depth of what it takes to be financially responsible, but that you have the ability to help us see through this, quagmire. You want to tell people how they can reach you and anything, of your services that they can avail themselves of, or tell us all about that.
You bet. And before I give you a website where you can reach out and contact, just to follow up on a thought just a little bit earlier, for any of your more mature businesses who are thinking about retirement, like your husband had just mentioned, and they're wanting to get out, but they're thinking, if we sell this business, we are going to owe so much tax that we really can't do it. Please let me know. We've got some great strategies on that end as well.
Oh, good. Okay, good.
Out without paying a ton of tax.
Great.
So,
awesome.
Just want to make sure that they know that's available as well. But the best way to contact me is www.taxcoachforyou.com. That's taxcoach, the number 4, you.com/well-designed business. And on that link, we have a tax planning guide that really digs into the new tax law versus the old tax law. Because by now, hopefully everybody has had one tax return filed with the new tax law. There's been some different outcomes maybe than what you were expecting. Your accountant may or may not have explained them to you. And so we're just offering this out as a way to kind of get a little bit of clarity on what happened or what's going to happen maybe this next year. So kind of just helping people still get their heads wrapped around this whole new tax law that we're operating under, and be able to answer questions and stuff along that route for them as well.
That's awesome. Well, I thank you so much. And I want to give a big shout out to Kravit Inc., one of our featured show sponsors, for helping us bring this program to you. And you know that Kravit Inc., you heard the recent episode over the summer with Jesse Lazarus from Kravit. And, one of their big missions in their company profile is helping you be a better interior designer and a better business person as an interior designer. And it's helping me bring shows like this with Diane Gardner to you, that Kravit Inc. supports you in that effort. So thank you to Kravit, and thank you to you, Diane. Thanks so much.
Oh, LuAnn, thanks for having me on the program. This was a lot of fun.
Thank you so much for joining me again today. This podcast is a production of WindowWorks, your resource for custom window treatments and awnings. To learn how we can help you on your next interior design project, go to www.windowworks-nj.com. And if you're interested in working with me on your business, either through masterminds or one-on-one coaching, or you want to know how to get my book, The Making of a Well-Designed Business, or you just want to know what's going on in the podcast land and where I'm going to be, all of that is found at LuAnnNigara.com. Thank you so much. Have an excellent day.